The last 24 hours has seen Bitcoin down 7%, and over the last week, it is down nearly 10%. We have to remind ourselves which stage we are at in the macro cycle. This video, we're going to look at Bitcoin, cryptos, and the stock markets. Massive news around the world, collapses happening everywhere, but no one remembers where the market has been and where it is going. It happens time and time again. Let's unpack it in today's video and enjoy the ride as per usual. You know what to do. Hit up that like and subscribe button. This is your home of macro cycle analysis. We're studying the past to forecast the future. Crypto, stocks, Bitcoin, and of course, the biggest market of them all, real estate. Guys, yesterday's video done amazingly well. Let's follow up from that video as well. Links in the top of the video description for our free crypto and economic report. And if you want to become part of the top 1% of traders, who, by the way, have been crushing it overnight with the volatility that we're expecting to come into the market. You've got ARV here, 46, 21%. This is just from the last 24 hours, mind you, 150%, 4,500. And this is just from the guys who are posting. Not everyone is posting their gains. 158, 137, 100, 115, 200, 400%. I could keep going on and on and on. You can see here the dates. You want to be a part of that. Link is in the top of the video description for TIA Premium. And of course, use these links down here for the crypto exchanges to potentially get on board with some of the free workshops. Guys, this has been incredible over the last 24 hours. We're going to get into lots of the details when it comes to the macro and of course the micro as well. There are key levels which are looking like they are potentially going to break down or at least get tested again. And we have our key levels in this cycle, which I have gone on record for saying I don't think these are going to get broken down and consolidated under. If they do, things are looking very bad across the board. So I want to get into those today, and of course cryptos. Now, you probably heard the news about the liquidations for Bitcoin and some of the other world major news, which we'll get to as well. Bitcoin in the last 24 hours, or cryptos in general, 177,000 traders were liquidated. The total liquidations come to just over $1 billion. This is across all markets, and the largest liquidation was on Binance for an ETH BUSD valued at nearly 56 million. So that was the total liquidation itself. If you want to get on the right side, like I said, check out the link for TIA Premium. Our traders are doing absolutely amazingly well. I'm so proud of you guys. In the last 24 hours, huge returns. This is what we need for a fresh start in the market. In terms of prices, I'm not going to sit here and say that I was the one to call the exact prices. No way. I've always talked about the prices are not as important as time. Time is the most important. So understanding where we are in the cycle. So looking at the cycle itself, the next news, the economic news here. Evergrande in China, property giant files for US bankruptcy protection. Debt-ridden China developer Evergrande files for bankruptcy in the US. So a couple of different lines here, a couple of hours apart. One saying they're filing for protection, one saying they're filing for bankruptcy. Let's look at the US, and this is what everyone is seeing for the US. 3 weeks, we are all down. It's the worst that's ever happened. We're going to go to new lows. But when you just scroll out to 2023, well, we are well and truly up on the market. You scroll out for the cycle, we're up even more. Healthy correction. I saw some people try to say that this is a healthy correction. We're in single digits still. People, come on. 5.6%. Where are we at today? About 5.5%. These moves to the downside, like we've measured before, this is about 8.8%, about 9 or 9.5%. In the bear market, these were the bigger moves, your 20, 25%, your 15%, your 20%. That is the big moves. We are most likely not going to see those bigger double-digit moves which represent a bear market. Now, we're not even at our 50% level here at 4,348. That is going to take us to about 6% down. I'm thinking we're probably going to test somewhere in this area, which if we then have a look at this next low, that's going to come out to the tops. We move our 50% to the following significant crisis low, 4,200 points. So I think that would have to be probably some of the furthest areas. And if we use the major 50% here from the cycle low, there's your 4,000. So I've gone on record for saying we are not going to break the banking crisis low. We're not going to break that on a weekly or a monthly closing basis and then consolidate under that level. And these lows are in. That is the low that is holding this up as a new higher low. And this low for this cycle is not going to break either. I'm looking at this here around 3,500 and 3,800 points as well. Come back to it. If you want to call it wrong, come back to the video, but that has to break for it to be wrong, okay? So keep that in mind if anyone wants to look at that as being wrong. For now, we're still only 5.5% down, 6% down here for the macro picture. Now, for the upside, we've started to really accelerate into these lows. So typically when that happens, we get that volatility come into the market. It generally means that we're getting somewhere around a low. This yesterday or today might not be the low, but it's likely that we're getting somewhere around the low because the move is just sped up and now everyone's talking about it. It's across the headlines. Remember when this happens at tops, you typically get the tops. When it happens at the lows, you typically get the lows as well, just like in June. And September was when the news was really loud, but October pushed down but closed higher. Note that. March, huge news. Way more news talked about everywhere across the world compared to what we're seeing now. So keep that in mind when we look at the overall macro picture. Overall macro picture, this is still well and truly intact. We're looking at a choppy sideways period going through the Q3 into Q4 of 2023. Note that, July top coming down. This doesn't feel, I get it, this does not feel like a choppy sideways period. But when we look back on it again in 12 months time, it probably won't look like much. Say we get a move down to 4,200 and whatever happens here, some ups and downs into the later half of 2023, and we finally start to break out in late 2023 or early 2024, then it's not going to look like much. Just like every single other time that we've talked about this, these don't look like much anymore and are not remembered. That's the big thing. At the time, it feels like everything. It feels like this is all that the world is focusing on. But then you look back, that was just a choppy sideways period from late March, early April into the breakouts of late May, early June. I think the same thing's going to happen on a bigger scale because we've been up a lot longer than what we have done in the past. And of course, we need to digest the movement. When it doesn't become a healthy correction and the market collapses, you've got to look back to the key cycle pivot points. So that's what we're looking forward to. Just a reminder, because macro things take a fair bit of time. Disbelief, I think we're still in this stage, and yes, we're getting a lot of those bears come back. So we've got to give them their day in the spotlight again. This is what happens in these periods of the market, and if it didn't, then we would have shot to new all-time highs, and the market's just basically pushing higher day after day after day in new fresh territory. But at the early stages, it's still a confused game for the masses. And those who don't follow charts are going to be even more confused because they don't understand why the market is not collapsing. But you guys watching a chart understand that these lows keep getting higher. That's an uptrend. It's not my opinion, it's a fact. So yeah, looking at it in terms of the Wall Street cheat sheet, that's where we currently sit. We've covered this chart before on the channel as we look through the transitional periods, giving us a bit of a timing as to when we could expect a breakout of the transitional period. We've also got this here, looking at the transitional, going from these lows, talking about 17,000 being a significant low in the market at the time in 2022. Great times to be buying Bitcoin under 20 grand. If you're trying to catch lows and highs, obviously it's not going to work, and you probably end up with not much at the end of the day. Just pick a range, stay in the market long term, and it's going to make you fortunes in the long run. So the transitional period, still looking pretty good. These areas have been fantastic for buying. Even if you don't catch low, don't worry about it. The people who try to catch those lows and say they caught them probably were buying each of the dips all the way down into that low in order to try and get that low itself. So that's the longer term there. The period that we were watching here is about 22 months from the low to when we break out of the 50% level. So 22 months in from the low to when we break out of the 50% level. Of course, it's happened on two of the previous cycles. I'm not saying it has to be exactly 22 months. Maybe it's a couple earlier, maybe it's a couple later. And in this case, we are holding underneath 32K, which is slightly weaker from where we currently sit comparing to the previous cycle. The cycle before that, we were still pretty low early on in the cycle before we finally got that breakout and reaccumulation, and then another reaccumulation towards the second half of the 22 months. So basically you got 2 years at the bottom for that accumulation underneath the 50% level before the breakout. How far are we into this 22 months now? We've got November, we are about 9 months in. So not even halfway into this period. And we've talked about it on the channel. There were quite a few expecting huge numbers. This is not my call at all. I'm not expecting 200, and I was called a bear for not expecting 200 before the halving, which is absolutely bonkers. So don't get caught out by those guys either. What we're looking at here is the possibility of more grinding, and in this case, looking slightly weaker than the previous cycle, potentially something like we saw in the 2015-2016 cycle. Now I added these extra boxes here looking at Q3 so we can label this particular cycle as well. And I'll get into the shorter term details for the pricing. But in terms of the timing, you can see Q3 hit and then finally move that bit higher at the end of the 22 months. Same sort of deal in 2015, 2016, but in 2019, it did have that hit first up. It didn't have the hit in 2015. That one doesn't really matter. It happened this time and it moved so quick that it came back down quite quick. This time it stayed within the accumulation, then broke out. So this time doesn't look like we're going to hit the 50%. So I'd say maybe we're similar to this, not exactly, but similar to this, and do not worry about that bar there. That only happens on certain exchanges, and this is just a basket of those exchanges. It's looking at a crypto chart. It's not an exchange chart, okay? So forget that one bar that just touched the low there in August. So where does that leave us? Well, basically like what's happened in history, probably grinding away until somewhere end of Q4, maybe Q1 of 2024, so end of Q4 2023, and that lines up with the S&P as well, like we're looking at on this chart here. But of course, Bitcoin being the higher beta play is going to get hit harder when it comes to the downsides, but you get the upsides. So you got to take the good with the bad. Let's go shorter term now. The short term 50% level has been broken. Yesterday's video, we looked at it happening twice in 2023, where you've got the 50%, so low to high. If I take a couple of these off, we can have a look at that 50% level itself. There was 50% on that March low. Hit the 50%, bounced away. This next one also hit the 50% level and then bounced away. But notice this bounce was half of these two bounces here. So the momentum is wearing off, or was wearing off to the upside. Bulls were hopeful for a rally to the upside, but it didn't happen. And then we had to start looking to protecting those positions on the downside. 28.3 was the level. We got a test, another test, and a breakdown. So this time we broke down. All that means is that we're going to grind out here longer than what happened in the previous cycles. That's what the breakdown of the 50% means. When we look at these things, it just tells you how strong the market is or how weak it is. The top level here, that's going to be stronger. The bottom level is weaker. Notice in the previous cycles here, or the shorter term cycles, so looking at it from the low to the February top, it was churning its way around in the stronger half of the 50%. And when it was able to do that, it could break away quicker. This time, however, we've now broken down from that level. You can see the test and a very weak bounce. It broke down from that level, so it's probably going to be weaker. Unfortunately for the bulls, like myself, that then opens the door to breaking down the 25K or the 24.75. For a round number, we've said 24.8 or 25K, but it opens the door to that if we remain under these levels for too long and test it to break down. It doesn't mean the macro is gone. It just means we could test these lower prices. So I just wanted to make that very, very clear, because it's very easy to get stuck in the mindset that that's it. Once we get the top in and we get a day or two, let's have a look at these on the daily here. This is where a lot of people freak out and say, well, we're going down to 15K. It's bonkers. It's been a couple of days, and usually when we get these sorts of moves, we're at least going to consolidate, and then we have to see what happens from that point. So nothing has changed yet, apart from the short-term breaking down into the week zone. We haven't broken 24,750. Yes, some exchanges do show it, but overall it hasn't broken down from that. We're on Coinbase here. So that lines us up to test the shorter term timeframes here to see if we get any strength coming back. We must get back over 28,300 and ideally above where the market was getting rejected at around that $29,500 level and start to consolidate above there before we can test higher prices. Probably at this stage, it looks like we're going to be just playing around in this lower zone under the 28,000 level in the weaker zone. So keep an eye on those prices. This has not changed. All right, this has not changed for me. 15,500, the cycle low, and 19,500, which was that March low, the banking crisis. I think these are still going to be intact. I don't think we're going to get closing underneath those levels and some sort of consolidation before a breakdown. So I still don't have those on my radar. The same thing, nothing has changed for those levels. The next step for the Bitcoin bulls is to get back above the 50% and that range at around $28,000 to $29,000. If not, then we open the door to testing $24,800 again and a potential breakdown. This zone right here, that's at our 50% from the entire range now. Remember, we looked at our time frames yesterday with the 33 weeks up and a potential of roughly 11 to 17 weeks down. Our 50% level for the entire range, $23,600, $23,700. So that's why this red box is sitting here now, looking at the tops around that 26K. And then the bottoms here at around $23,600. What we don't want to see is breakdown of that zone. Okay, that is the long and the short of it. Check out the link in the top of the video description. Get on board with our traders who are crushing it in this volatile market. New ones up as I'm recording this. Well done, Mario. Managed these two 74 and 30%. Great work, guys. Like and subscribe as per usual. See you at the next video. Till then, peace out.